All right. So if you go to the canvas and under the module, you will see the module, and you will see the class materials. You read all these chapter PowerPoints, of course, and also you watch the videos. Um, the next video is based on uh, the real world situations. I felt that if you look at the PowerPoint chapter 1, it's all about theories and practices. It's a little bit dry, so I want to add more flavor to the content, to the introduction of the corporate world. This is based on the economic summit organized by St. Xavier University and the Federal Reserve Bank of Chicago in 2015. Okay, the topic is Seeing Tomorrow. And in this section, I introduced the companies in the state of Illinois. So if you Google search my name, Sun Wang, and Chicago Tribune, all right, it was reported by the big newspaper, Chicago Tribune, and you will see the report on this economic summit. Okay, so yeah, so I'm pretty proud of myself to do that. All the research here showed in the PowerPoint is all done by myself. All right, so it's an introduction of the real world situation, which is not covered by the textbook. So therefore, I'm going to make this part extra credit. If you look at the canvas, you will see the PowerPoint file is extra credit, and the report, which is the assignment you're going to write, is extra credit. So if I click it in there, you will see the topic, of course, extra credit report on Illinois corporations. And you are required to submit one Word file for the report. One page single page would be good enough. Okay, and if you there's no time limit. You see, when I edit this assignment, there's no time limit for you to turn it in. So which means you don't have to do it, but by the end of the semester you can do it, just in case you feel your total grade is a little bit low. Just by doing this and make 5 more extra point, that can make a big difference on your final grade. Then you just do it. Okay. The bottom line is you don't have to do this unless you feel that can significantly help your letter grade. All right. This is going to be an online submission. Okay, you're gonna give me a Word file. All right, so this whole report will be based on this PowerPoint report. Okay, so what I'm going to do here is to introduce you the companies in Illinois, and I was going to do some forecast. And all my forecast number was pretty accurate, I would say, as I would show you later. So I'm going to tell you a little bit about the assets growth in the state and also the entire country, because the capital accumulation will determine the increase of employment of labor. And you know the employment is a big economic indicator for the financial health of the firm, of the entire country. All right. So I'm also going to look at the revenue of the companies and also the earnings, or the profit or net income of the companies. It's basically the same thing, different names. The profitability is measures the living standard of investors and also further investment of the companies. And also I look at the management efficiency of companies. All right, so if you look at the companies, they can be divided into publicly traded companies and private companies. So the public traded companies are those corporations with their stock listed in the open stock market. Okay, the stock market would be New York Stock Exchange, NASDAQ, American Stock Exchange. All right, like Apple, like Boeing, like United Airlines. You can find their stocks. And privately held corporations or LLCs and LLPs are companies you can not trade their stocks openly in the market. Okay, but still these are strong companies with a significant size. So these are the big names for private held corporations, and these are big names for publicly traded corporations. So the United Airlines is headquartered in Illinois, Allstate, Northern Trust, Boeing. These are all even headquartered in the city of Chicago. Walgreens, Exelon, Sears, and so on. And if you look at the map of the Greater Chicago area, which include part of Wisconsin and a part of Indiana, you will see that the private held companies, in terms of numbers, are huge. All right, in the Chicago metro area, we have 8,000 of private held companies. In comparison, the public traded companies are only 205. All right. Outside the Chicago metro area, we're talking about the rest part of Illinois. You have 26 public firms, whereas the private firms are 11,000. You see, that's a stark contrast. That's a huge difference between the publicly traded firm and the privately held firms in terms of number of companies. Okay. If you look at the key financials of the Illinois companies, well, you will see this green columns stand for the Chicago public firms. All right, and you can see that the Chicago public firms really has a lot sales, a lot total assets, and a lot net income compared to non-Chicago public firms and non-Chicago private firms and Chicago private firms. So although the private companies gives a lot of numbers, okay, but in terms of financial information, the Chicago public companies, although at a 200 companies amount, they take most of the sales, most of the total assets, and most of the net income. All right, so that's why this finance course focus on corporation only. All right, so if you look at this chart, it shows you the assets distribution and revenue distribution of the companies. So once again, we have 4 types of companies. Right. So let me show you. So you have Chicago public and private, non-Chicago public and private. As you can see that the Chicago public takes the most of the part. All right, for this is for revenue and this is for assets. All right, let's look at the historical trend for the growth of public companies. Well, we know that the Chicago public companies take most of the revenue and assets for the entire corporate world of the state. Then if you look at the past 40 years or so, you will see that the number of firms, of course, Chicago public firms, increased to a peak in 1997, and then the stock market crashes, the tech bubble bursted, and then sadly 9/11 happened. Then you had a decline of corporate numbers. Okay. However, in terms of accumulated revenue, okay, the revenue actually keeps increasing in the past 40 years, with a little stop in 2011 due to the event of 9/11. In terms of total assets, you will see that it also keeps a steady growth. There is a sharp plummet right here. It's actually very it's not a big deal. What happened there was 2 companies disappeared in 2011. One was Bank One, and another is HFC. These are both financial firms in the Chicago area. Okay, And they did not bankrupt, they did not liquidate, they did not sell off their assets. Instead, they got acquired by other companies outside of state Illinois. Okay, so the Bank One was acquired by J.P. Morgan Chase, and HFC was acquired by the British bank HSBC. So if you adjust these two acquisitions, so let's say then this would be the trend. If you adjust for the acquisition, we assume that those two companies do not exist whatsoever. Okay, then this is the assets growth, and you can see the growth rate is pretty steady. All right, and if you adjust for inflation, we use the 2009 dollars to adjust for inflation. Well, this is a very practical technique. If you would know that if you have taken macroeconomics class. Okay, and if you compare the Chicago Public Company's assets level and the GDP of the country, they both keep a pretty steady growth, and that's my forecast. And it has been pretty accurate. So this is another forecast, and we use nominal GDP. All right, so the assets keeps growing at a 4.18% rate in the next 2 years, or $81 billion. Okay, and if you look at real GDP, the real GDP's growth would be higher compared to assets growth. The real GDP actually, as you can see, the curve is steeper. That's for real GDP. For assets growth, is actually a little bit fatter or slower. Okay. All right. If you look at the revenue would not be that steady in terms of growing. It's a little bit bumpy. Okay, right here you see it's a little bit bumpy, but the general trend is still upward, and the nominal GDP would be a benchmark. All right, so that's my forecast, which incorporate the trend in the past and also the cyclical pattern in the past. All right, in terms of revenue, then the revenue of Chicago public firms are not forecasted as great as the GDP growth. It's actually flat, okay, without too much growth. All right, so now let's take a look at different industries. We divide our 200 or so Chicago public firms into 4 major industries. You also have other industries. The 4th major one in terms of assets would be financial, manufacturing, transportation, retail. Okay, once again, I mentioned that Bank One HFC disappeared in 2011. In 2001, because of they are acquired. So if you adjust those acquisitions, you can see the yellow curve stands for the financial industry, actually keeps growing with no plummet. All right. So the financial industry is the industry that grows at the fastest pace. All right. And then the second largest one is manufacturing, followed by transportation utilities. Well, in the state of Illinois, we have United Airlines, and we used to have Continental Airline, and these are the big players in this transportation industry. And the retail industry is not small either. We have Sears and we have Walgreens. These are all retails. Okay. In terms of revenue, okay, remember the blue color stands for manufacturing. Well, the yellow color stands for financial industry. This is for revenue, and the previous picture is for assets. You see, in assets, the financial industry actually is quite large. However, in terms of revenue, the financial industry, the yellow curve, got to the bottom. So that means the financial industry have a lot of assets, but they do not generate a lot of revenue. Okay, so when you have a lot of assets, but you don't have a lot of sales or revenue, that means this industry is not very sufficient. Okay, this is not very efficient. I'm sorry, not very efficient. But what industry is efficient? That's of course manufacturing. You see that manufacturing has a relatively low assets, but they generate a huge amount of sales. That's a big indicator for efficiency. All right, and we're not talking about the companies that produce bicycles or toys. We actually talk about a high-level manufacturing firm like a Boeing company, like Apple Laboratory, like like a Chicago Tribune, even the media firm. They produce a high value added manufacturing product. Okay, and in terms of net income, it's quite bumpy, and you don't see a lot of information there. But you can see that the blue curve is placed on the top. On average, that's the manufacturing. So the manufacturing industry in the state of Illinois, or in Chicago, is very competitive. And you see the green curve is very bumpy. You have a big spike right here. That's all because in 2001, when 9/11 happened, this transportation industry got hit a lot, and then in the following year they got a rebound. Okay, so if you compare the Illinois public companies with all other states in the Midwest, all right, you will see Illinois companies have a largest amount of assets, large amount of sales, and also large amount of profit or net income compared to all the other states. So in terms of business, this is the best state. All right, in this map, you will see all the other players in the Midwest region. So of course, if you have a big level of assets, then this would be a large number. And the bar here would be higher. And then this map basically shows you the city of Chicago. Around it would be the rest of Illinois. And then, Chicago Bulls basically is a champion. And right here is the second part. That's where the Vikings are. And you also see this this area right here. That's basically in the middle of Nebraska. It's called Omaha. Do you know who is there? That's Warren Buffett. Okay, he's a big company. Berkshire Hathaway is also a very huge company. Okay, so these are the major players in the Midwest corporate world. All right, in terms of the entire nation, if you look at the revenues, okay, these are the heat map for the revenue generation. And the Illinois area is one of the hot zones in the entire nation. Here is Detroit. Here is the Minneapolis-St. Paul area. Here, this is New York. This is the San Francisco, Los Angeles. This is Dallas. This is Houston. Okay, and all these hot areas are where the business are prosperous. In terms of management efficiency, well, you need to look at two things. Management efficiency is indicated by sales divided by assets. If you have a huge amount of sales, well, having limited assets is more efficient. Okay, so if you look at all the major states, well, you see the New York Giant. They play a big role here. They have a lot of assets right here. Well, Illinois is not as big as New York Giant. And if you look at revenues, you see Texas, New York, Illinois, and California are the major players. Okay, if you look at the efficiency, well, if you use the sales divided by assets, Illinois has the highest ratio of sales over assets, or highest assets turnover ratio. That's the name for it. When you use the sales divided by assets, it's called assets turnover ratio. Illinois is the best in terms of efficiency. And this is the designation that we should be very proud of ourselves. All right. So if you look at the privately held companies, you will see that the Illinois state has the largest amount of profit for privately held firms. Okay, this is also a very good news to hear. And in terms of assets, in terms of assets, you see Massachusetts has the highest amount because Massachusetts is where Liberty Mutual is, and that insurance company is a very huge privately held company. Okay, so these are my concluding marks, and it basically tells you that the investment would grow for the next several years as the newest data shows. The U.S. economy has been doing really, really great. That is consistent with my forecast 3 years ago. And the revenue also keeps growing at a good pace. The income growth is more uncertain, and the employment is definitely expected to increase. Well, this is a forecast I made in 2015, and now it's 2019, and you can see that employment has been steadily grow. So, which means my prediction is pretty accurate. All right, and the employment was mainly from the financial sector and the manufacturing sector. All right, and the research basically says the Illinois public companies have highest management efficiency ratio compared to all major states, and also has the highest amount of net income for privately held companies compared to all other states. All right, so that's the economic summit, and based on this, based on the introduction of Illinois companies, you are going to write one-page report and submit it online. Okay, this is extra credit. You don't have to do it, and there's no due date for it. Again, there's no due date for it, so you can decide whether to do it at the end of the semester.